Good evening, everyone. I'm Larry Kudlow. Welcome back to Kudlow & Company. We aim to be right on America, right on business, and right on the money. We still believe that free market capitalism is the best path to prosperity. On this evening's program, Goldilocks still rules, in my view. But let me tell you what my latest worry is. All the major Wall Street strategists are now agreeing with me. When I started this mantra earlier this year, most of them disagreed. Now, suddenly, I'm in bed with some folks I'd rather not be in bed with, because they're usually wrong. I'm not going to name names. You know who they are. Call them Johnny-come-latelys. Take a look at this.
The number one threat in America, bears.
All right, but all seriously, I am starting to worry about Goldie just a little bit because I can't find any bears. Joining me now, John Rutledge, former economic advisor to President Reagan, chairman of Rutledge Capital. John, by the way, is just back from a trip to China. He's the chief advisor to China's Silicon Valley governor. David Reilly, director of portfolio strategy at Ritholtz Investments, and Barry Ritholtz, chief market strategist at Ritholtz Research and Analytics. David Reilly, I know you're an optimist, or you were the last time you were on the program, and I appreciate that. But I want to ask you, there was a news report on one of the financial services today that listed all the major strategists on Wall Street. Every single one was bullish. Indeed, not just bullish, I would say very bullish. Now, are there too many bulls out there? Does that mean we're heading for a correction, or does none of this matter at all?
I don't know if there are too many bulls out there, Larry, but there's a lot of complacency in the market, and two things really point that out. One is the record low volatility. If you look at VIX, it's below 11. And secondly, if you look at sector performance year to date on the S&P, everything, and I mean everything, is up. Most of them double digits. While we're long-term bulls, we don't think that there's going to be that smooth a ride. In fact, we see the economy slowing down and the market in terms of its action slowing down and getting choppy like we saw earlier in the year. A little bit later down the road when the Fed converts over to an ease, and we think that's later than most people indicate, then you'll get something. But it's not going to be that easy a ride.
Interesting. You know, John Rutledge, there is a counterpoint of view on this. Our friend Donald Luskin has been writing about this. A few others have. That the economy is a lot stronger than folks think, that inflation is still a threat, and that interest rates in 2007 are going up rather than down. Now, if Mr. Luskin is right, I dare say the market is going to get hammered at some point. So, John, what about this story? There too many bulls out there?
Well, Larry, I think Don is exactly right on one out of his 3 points. The economy is stronger than most people think. That's why the profit numbers have come in so well. But the bond yield is down because the inflation was a temporary oil-driven phenomena, and now the pressure's down. 4.5 bond yield, 20% profit growth. That's why Goldilocks is with us today.
And so you're not worried that everyone has climbed on this soft landing, Goldilocks, growth is okay, inflation coming down, interest rates coming down scenario. You're in with some company, John, that you wouldn't ordinarily be in with on this.
Normally, I'd rather be with you in a rowboat and leave those guys behind, Larry, but I don't like it either. But, you know, I think the secret of investing is only do things you think you know how to do. I don't know how to short-term time the market. I just know how to understand the fundamentals. And right now, even at today's prices, the market's too cheap, and the fundamentals are fantastic.
All right, so you're sticking with Goldie. Barry Ritholtz, let me ask you. You have played part of this year, at least, on the bear side. You have not been rewarded for it. You're one of the few, though, I think, who stayed with the bear call. Is that right? Are you still a seller here?
Well, you know, in our managed accounts, we are not fighting the tape, and we have a lot of long positions. But we continue, and we do respect the momentum and the absolute liquidity-driven activity that's been taking place. But we don't buy the Goldilocks scenario, and we look out into next year, and it's pretty clear that the economy is slowing, inflation remains a problem, and we're at the top of the earnings cycle. Things are as, you know, you want to buy things not when it's great, you want to buy things when it's a little sketchy. I disagree with what some people have said that, you know, the fundamentals are terrific. We see lots of cracks in the wall.
Who do you disagree with? Do you disagree with John Rutledge?
Well, as much as I hate to, sure, I'll disagree with him about the fundies.
Oh, Barry, you break my heart.
Well, John's got a great track record, and he's a long-term investor. A lot of our clients are institutions, and they're forced, due to their own performance anxiety and how short-term their clients are, to run with the tape, and we've seen them flip bullish over the past couple months, but we know it's been somewhat reluctant. They see the straight move up from July, and it concerns them. Clearly, the trend remains up, But when you look at the fundamentals and you look at the things that are starting to decay, the headline numbers have been very misleading. I didn't buy last week's retail number. That was due to a methodology change. If you listen to what all the retailers have said, things weren't great last month. They were actually pretty disappointing.
Yeah, it's always great. The mark of a great bear is when the number comes out and you don't like the number, you blame the people that published the number.
Well,
I mean,
listen. How did construction materials go up
was up
when
1%,
Home Depot and Lowe's said it was awful?
Well, maybe some of these anecdotal reports are just wrong, but
Home Depot and Lowe's? That's not really anecdotal.
Well, who knows? I don't know. Maybe they're not as large a factor.
How about a little company called Walmart?
Look, one of the things you've been beating up on is car sales. Car sales have been great.
The controversy was last spring.